and momentum investing has been the opposite of. And this is could be, I think you wrote a blog post about this, Chamath, sort of the regime change. If you look at the Googles, the Facebooks, the Apples, Amazon's is a little bit of an exception here. Those companies printed money. They had profits. They built up large cash reserves. If we look at the next cohort of companies, Airbnbs, Coinbases, Ubers, et cetera, they focused on the top line growth, much like the Amazon, which was a very obscure approach, correct, Chamath, in the history of this?
Nick, do you want to just throw up this chart? We did a little analysis over here, and it was just basically looking back 60 years of company formation. We looked at all of the 100 most valuable public company startups, and we indexed that to the 10-year interest rate.
So what are we looking at here, Chamath, with this chart?
So basically, we went back from 1960 onwards. So basically, 63 years. And what this shows you is the 100 most valuable public technology companies. Then the size of the circle here is their market cap. And then it's overlaid on top of the 10-year interest rate, as well as gray bars for recessions. So what is this graphic meant to illustrate? Well, it just was for us to study, is there a correlation between the value of companies and what the interest rates were or what the economy was doing at the time? And to your point, Jason, the trend is pretty starkly made on this chart, which is that if you are a company that was founded in a period of austerity, you had the ability in general to build a much larger company than that which was founded in a period of wealth and excess, right? So when you look at when rates were sort of approaching zero or were zero, there was a lot of really successful companies. They're listed here in the light gray on the right, but none of those things really represent the success that these other companies had. That's the first interesting takeaway. The second interesting takeaway, though, from this has nothing to do with rates per se.